Today I have a major report for you, $65 trillion worth right here in this episode. The first thing I want to look at is the $65 trillion mystery. This was really underreported, and the fact is, it's been going on for a long time, okay? The second thing I need to look at is the economic crisis and the solution to all of this. It's important to follow along to the details. I promise you, no matter what level you are at with your financial wisdom, I'm gonna break it down so simple for you. Let's begin. The information I will get into today comes from the BIS, the Bank for International Settlements, which is often referred to as the central bank for central banks. They produced this report, as they do many other reports, and it highlighted some extremely important information. This is it. Huge, missing, and growing $65 trillion in dollar debt sparks concern. BIS researchers highlight off-balance sheet dollar obligations. Report calls these FX swaps, foreign exchange swaps, a blind spot in global finance. This is something that I've been talking about for quite a while, and now we have a total. And this is just some of it. We don't know the whole total. This is what they found. Looking at the actual report, because if you've been on this channel for a while, you know I always give you the actual source itself, always located in the description. This is some information from there. FX swaps, forwards, and currency swaps. And by the way, you might think, what the heck is this guy talking about? Hang in there. Give rise to dollar obligations that were backstopped in 2008 and 2020 by central banks acting on little information about who owned the debt. Oh, that sounds pretty safe, doesn't it? Okay. For non-banks outside the United States, dollar obligations from FX swaps, forwards, and currency swaps have grown fast, reaching $26 trillion or double their on-balance sheet dollar debt. Wait a second. You got on balance sheet, and then you have off balance sheet? That doesn't sound too good now, does it? Look at this. There's a hidden risk deep inside the global financial system embedded within $65 trillion of, quote, dollar debt held by non-US institutions via currency derivatives. Banks headquartered outside of the US carry $39 trillion of this debt. That's more than double their on-balance sheet obligations and 10 times, check it out, 10 times their capital. Shadow banks, otherwise known as non-bank financial intermediaries, that's a mouthful, have increased their dollar swap and forward liabilities to $26 trillion, twice the size of their on-balance sheet dollar debts. Here you go. Look at that blue area in the chart. That's off balance sheet. The beginning of the chart starts in 2008. So how many times have you heard, oh yes, everything is safer today. We don't have the same problems we did in 2008 because it's off the books. It's off the books. But don't worry, because when there's a crisis, they're going to pose a solution. If you stick with me in this video, I will show you that solution, or at least the solution in quotes there. Look at it. You could see unrecorded bank debt. Non-US banks have almost $40 trillion in hidden dollar liabilities from FX swaps and forwards, nearly 3 times their recorded dollar debt. This is huge, guys. Come on. Look at all of this. Now, it doesn't mean it's going to crash tomorrow. It doesn't mean that all of this necessarily represents a problem. It's that they're able to hide the problems until the last minute when everything goes down. This $65 trillion of debt we're talking about isn't a set of straightforward loans or bonds. It's the repayment obligations on foreign currency swaps and forwards. These are typically used by foreign banks and investors when they want to buy dollar-based assets like a US Treasury bond. Swaps and forwards are fully collateralized and so ought to be relatively safe for the counterparty. That's right, totally safe, right? Okay, and then they go on and on. This is important because it's a situation in which we were told, hey, not going to be an issue this time around. But in fact, there's something else that's happening. Due to the growing use of shadow banking in the swaps markets, analysts and credit rating agencies are unable to track these liabilities, which typically mature in less than a year and are already vulnerable to funding squeezes in which borrowers can't access the capital. I mean, that's how crazy this is. That you've got this $65 trillion monster and nobody really knows how to deal with it or where it all is, and is it going to cause a problem? It probably already is in some ways. Oh my goodness gracious. It's not even clear how many analysts are aware of the existence of the large off-balance sheet obligations. That is a quote. When I say these things, I literally, as I'm reading all these articles throughout the day and then I put together the video, this is crazy because I'm actually reading these quotes that seem so extreme and yet they're right here. Hidden debt of shadow banks. Non-bank financial intermediaries outside the US have FX swap and forward liabilities double their recorded dollar debt. Again, you could see this. Off-balance sheet is that black area. Look at that. Financial crisis. Oh yeah, everything's going to be oh so fine. And we see it growing and growing. Just look at the recorded blue area. It's going up, it's going up, it's going up. But look at the off-balance sheet. It has gone to a greater degree, much greater degree over the years. What do you do when you have a problem? You cover it up. Let's break this down right now, today. The potential financial risks of having $65 trillion of off-balance sheet dollar obligations is staggering if not managed properly, could lead to a devastating financial crisis. Derivatives, a common form of these obligations, can be particularly dangerous due to the lack of transparency and difficulty in pricing. As Warren Buffett famously said, quote, "Derivatives are financial weapons of mass destruction." This was made clear during the 2008 financial crisis when the lack of regulation of derivatives and the complex web of interconnected debt resulted in a systemic breakdown of the global economy. Without proper oversight, off-balance sheet obligations could be the cause of another financial crisis in the future. The only question here at this point is, what would be the solution? The solution to all of this madness. If you have a crisis potentially as big as financial crisis 2008, maybe even larger, well then, that's a perfect opportunity, isn't it? Let me show you some information that I believe you should be aware of. Now, we got to look at it really quickly. You got the poly-crisis, inflation, overlapping emergencies, things that are happening right now today. They've been going on for a little while. You could look at this. Of course, the page likes to refresh on me, and you could see how we've gone into this period where 4 in 10 consumers expect housing market is going to crash. The real estate's got its own problems. We know that. The Germany housing market facing a serious downturn in prices. Yes, no matter where you look, it seems to be the case. And then we have this household versus establishment survey. Divergence hits an all-time high, where we're being told on one end that everything's okay with the jobs. In fact, it's a super strong job market. But then you look at a different set of data and it tells a very different story. In fact, it is a record 2.7 million person difference or jobs difference. Look at that. Establishment survey, that's the green line, telling you one statistic. And then the household survey, looking at how many jobs there actually are, 2.7 million. Really different, isn't it? That should be a telltale sign. I mean, you've seen these articles before. PepsiCo to lay off hundreds of workers in headquarters roles. How many times do I have to show you these things? 1,000 people here, 2,000 people there, 3,000 here. It seems to be going on everywhere, doesn't it? And of course, with inflation, this is the way it goes. Global wages take a hit as inflation eats into paychecks. I think it's pretty obvious that you look at what's your real wage growth? Well, if you factor in the inflation, it's probably not very good. In fact, it might be in the red. And that's when we have the potential here for a solution. What could it be? Well, I'm going to talk about the fact that, number one, just think about this for a second here. Look at this. I want you to know very quickly that when the government is out there and they somehow don't have oversight of $65 trillion, any of these governments, you've got off balance sheet. Look at what happened with FTX. Look at how many things the government apparently cannot see into. And yet, and I know that I saw you, my subscribers, talking about this, so I wanted to include it, the fact that if you've got a $600 transaction, you make $600 and it goes into your PayPal account, well then, the government's fully aware of that. Doesn't it seem so unusual to you? Isn't that so strange that they can't, I don't know where the 65 trillion went. Who knows, right? What about the trillions with the Pentagon? Oops, I went there. Look at how serious this is. Do you think it's a coincidence? Of course not. Now let me get into this right here. I want to break this down for you. I've got this information to share. Central bank digital currencies are likely to be implemented globally and linked through an organization such as the Bank for International Settlements, the BIS, after a major financial crisis as part of a rescue plan or bailout. This is because CBDCs offer a number of benefits this is what they would say, right? Offer a number of benefits to stabilize the global economy and provide liquidity to those worst affected by the crisis. The main benefits of these CBDCs are that they are more efficient than traditional paper money. Again, I want to highlight the fact that this is like the financial world and what they believe. They can be used to combat money laundering. They can provide more stable and secure payment systems. Additionally, CBDCs can also be used to facilitate cross-border payments and to increase access to financial services in developing countries. When we see a number of private cryptocurrencies being used already in places, different areas in Africa and other in Venezuela, so many places. A number of countries, including China, are already testing CBDCs. China's central bank digital currency, DCEP, is designed to reduce the cost of both domestic and international payments and to support the country's transition to a digital economy. The Chinese government is also experimenting with using the DCEP as a tool for controlling, good word here, controlling money supply and interest rates, as well as for facilitating faster international payments. And I do admit that international payments are a headache. They're too expensive. I wish we had a solution, but they want to give us the wrong one. If a major financial crisis were to occur, it is likely that the BIS would implement a global CBDC system in order to provide liquidity and stability to the global economy. It is expected that this system would be implemented over a period of a few years, with the first countries adopting the system in the first year and then the remaining countries following suit over the next 2 to 3 years. This is my expectation. I do not know exactly what's going to happen, but let me tell you that this is what they've been talking about and this is what they want. We've heard from the World Economic Forum. We've heard from so many people in the high up places. The CBDCs are coming, but we need a big crisis in order to take advantage. That's what we're dealing with today. Get ready. Universal basic income is coming. You're going to have to accept the CBDC and you are going to be in dire straits. And there's so much that I've covered in previous videos before talking about right here, the pillars of prosperity. That is in fact the solution. When you look at the pillars of prosperity, there's two things. You can simply go, hey, I'm going off grid. I'm not dealing with anybody in these CBDCs, or you could start to make much more money, or both. And these things together will help you. I can get into these things in other videos as I have before. Look at my playlist, How To and Solutions. I've got 2 books on the topic. You can reach out to me directly. So much to cover. I only got to a fraction of it. I hope you found it interesting. If you did, hit that subscribe button. Tomorrow's video, I'm going to get into more and more depth on these topics. You got to stay tuned. Hit that subscribe. See you then.